Warmly welcome everyone and thank you for joining us today. It's great to see participants joining from across the Asia-Pacific region and beyond. We are very much appreciate you taking the time to be part of the discussion today. My name is Anna-Stina Wiklund and I'm an advisor in responsible investment and the founding advisor of the Global Advisory Alliance based in Spain in Europe. Before joining GAA, I was head of responsible investment at the Church Pension Fund in Finland. At GAA, we work with investors, companies, and public institutions on how responsible investment can be translated into credible and practical decision-making, particularly where sustainability, geopolitics, and investment increasingly intersect. We are pleased to host this session today together with Responsible Investment Association Australasia, RIAA. And this is the third in a series of regional discussions we have held on defense and responsible investment, following earlier sessions with European and North American investors. Our moderator on today's discussion will be Dominic Webb from Responsible Investor, who also follows this topic very closely. Thank you, and over to you, Dominic.
Thank you, Anna. Good afternoon, everyone, and good morning from London. Since the Russian invasion of Ukraine in 2022, the defence investment landscape has changed significantly. Huge planned increases in defence spending and a shift in attitudes towards the sector have led to many investors re-evaluating their exclusions policies, and increasing investor interest is driving the launch of new defence-focused funds, as well as increasing capital allocation in private markets. However, intensifying global conflicts and geopolitical instability, the increasing use of AI and autonomous weapon systems, and the lack of transparency in supply chains and customer bases, not to mention the significant human rights risks associated with arms export and use, make defence a very complex sector for investors to evaluate. To discuss these issues and how investors are looking at responsible defence investment, I am delighted to be joined by an excellent lineup of panellists. You have already met Anna, but I will let the rest of our guests introduce themselves, starting with Estelle.
Good afternoon, good morning, wherever you are. My name's Estelle Parker. I'm the co-CEO of Responsible Investment Association Australasia. Welcome in particular to the RIAA members that have joined us on this webinar. RIAA, for those who don't know, we're an industry group, the largest sustainable finance focused industry group covering Australia and New Zealand, representing about 75% of managed funds in Australia and a similar amount in New Zealand. And we've certainly been focused a little bit on investing in defence, in particular through the groundbreaking work that we've been doing on investing in conflict zones and international humanitarian law implications of that, but also engaging with the grid, which I think we'll be speaking about later on, which is a global project that is aiming to set some standards around responsible defence investing. It's great to be with you all.
Thank you. And then on to Jillian.
Hi everyone, Jillian Reid. So I head sustainable investment for Australia and New Zealand for Mercer's multi-manager solutions. Our clients are superannuation members and endowments and insurers and wealth management clients. So we're part of the global Mercer business, which is rebranding to Marsh, our parent company's name, from next week.
Thank you. Yumi?
Hello everyone. My name is Yumi Fujita. I am a senior engagement specialist at Robeco, and I lead engagement on social topics with companies. Robeco is a Dutch headquartered international asset manager. And we have quite a big team of sustainable investment and team and solutions as well. Looking forward to the discussion.
Thank you. And then on to Christine.
I am Christine Chow. I spent about 25 years in investment management in various firms such as Schroders, Federated Hermes, HSBC, and UBS. I think in the context of what I'm doing now that's related to this webinar, there are a number of angles because I have a portfolio of work now. First of all, I've been involved in capital market solutions. So recently, Deutsche acquisition of FFG has been very interesting. It's transitioning into much bigger defense exposure with a lot of shareholder support. Another role I have is with Cambry Insight, which is using AI to identify ESG risks and opportunities, and they've been doing some work on dual use and defense assessment as well. And lastly, I'm a board member of Shift, which has been very much involved in setting the standard of UN guiding principles. So happy to talk about this issue from the various angles. Thank you.
Thank you, Christine. Now, I would like to start off by setting the scene a little with our panelists and the work they've been doing. But before we start, we will try to get to audience questions at the end. So please do submit your queries using either the chat or the Q&A function. Now, Anna, as you said, this is the third edition of the webinar that we have done. We focused on both Europe and North America. Could you talk about some of the takeaways from those two webinars and what are the key issues for investors in those regions?
Sure. So our European session was organized in March and the North American session in July. And what actually struck me maybe the most is that the investors are quite have the same kind of underlying issue they are wrestling with, but coming from a bit different starting points, if we say like that. In Europe, we have seen particularly the Russia's invasion of Ukraine, that the conversation has moved a lot from traditional exclusions-based approach to a more broader discussion about security, resilience, and the role of defense in democratic societies. Each country should have the right to defend itself and how that shows then up in investment portfolios. So it's not anymore about can we invest in weapons, ammunition, but how can, if we want defense exposure, how can we do it more responsibly? It's not a black and white picture anymore. Then in North America, we heard many of the similar kind of concerns, but I would say the financial materiality was one point that came through very strongly. Participants there were a lot of focusing on the governmental defense spending, geopolitical competition, and of course, growth of defense-related technologies and how that's impacting the portfolios. And there are still investors who see defense purely as an ethical or an exclusion sort of question, but increasingly investors are seeing how the new sort of growing themes such as industrial policy, supply chain resilience, cybersecurity, AI semiconductors, and critical technologies are sort of gaining ground. Then I would say that simply assuming that increased defense spending makes the entire sector attractive is not realistic, but the questions and they start to rise more around governance, contracts, export controls, human rights, reputational exposure, and actually the durability of the government spending. Will that continue for long, or is this like a trend that will blow over? But I would say that the sort of main takeaways from the North America was that responsible investment and financial analysis are becoming more harder to separate on this topic. And it's very important to understand what is financially material, and also that the need for more practical frameworks is something that investors are increasingly seeking, and that's something we will discuss a bit later on at this webinar.
Great, thank you very much. Now, Christine, I wanted to come to you because this was a topic that came up before the panel. Defense itself is a loaded term, and I think part of the increasingly blurred lines around the topic, investors are beginning to think a bit more heavily about what is offence, what is defence, what is dual use, what is civil resilience. Could you talk about some of the discussions around what defence investment actually constitutes?
Yeah, thank you for that question. And I think this is really open up to others on the panel about their experience in engaging with companies as well. Because years ago, we have already looked at the dual use, which is a term that is more recently coined. But I think even 8-10 years ago, we were in the investment industry, we were already engaging with companies like Hikvision. Since we are talking to Asian investors, let's bring up some Asian companies. Hikvision has facial recognition technology, and it was accused of being used in a way that is not its various use may lead to national security issues. And I remember at the very beginning when engaging with Hikvision, they didn't even have a chief compliance officer. And as a result of that investment engagement, they appointed a chief compliance officer, and then commissioned a third-party human rights due diligence assessment for their use and enhance disclosure on how the contracts with third parties as well as with governments work as well. So I think investment stewardship in that area has long been established. It's just that the dual use of different technologies is something that is being brought into light. And more recently, it would be the drone technology, like DJI is a big drone producer, also again based in Asia. And actually, a lot of Americans have bought the retail customer use of DJI drones use as well. And there's a court case happening in the US. So I think that the whole investment industry is monitoring how these conversations are going. But the idea of segregating offensive and defensive technology continues to baffle me, because I think that it is a bit of a continuum. It's a grey line. It depends on the connection of a company to governments, their exposure, in which ways that they're exposed to them, and also if they have intentionally put in place sort of human oversight and also assessment along the way. And I think this is how the companies like Cambry is doing the work and creating a framework to ensure that the assessment is up to date. So we're not just relying on sort of traditional set of data, etc. So it's what Anna was talking about, and what is the practical way of monitoring them, because the world is changing. So very interested in hearing how different asset owners are defining offensive and defensive defense technologies and how to implement it.
Thank you. And we'll now move on to the changing investor perspective. Estelle, how are RIAA's members looking at the topic, and how has this changed over the past 3 years as we see these global conflicts intensify?
Yeah, I think it's the conversation is not as advanced, I think, as in Europe. We're not quite at the stage of having intellectual or kind of ethical debates about a country's right to defend itself, or defence in the context of a democratic society that Anna-Stina was mentioning before. But certainly the risks around relating to defence are very much on the radar for Australian and New Zealand investors, and they have moved from a lot of them have moved from blanket exclusions to kind of a more nuanced assessment. So certainly more aware of the risks and the responsibility to protect human rights, no matter which industry, but certainly defence is a high risk sector here. So that material impact that human rights has on valuations and returns. So looking at the reputational risks, and certainly the recent and current conflicts have made investors in Australia and New Zealand very cognizant of that. But also looking at the governance risks, where this is a high risk sector for corruption, and there are various ways to have a look at it and identify that. And the environmental risks. A lot of these products are very poor for the environment. They contaminate soil and air. There's a lot of chemicals that are used, toxic chemicals, and then looking sort of down the customer chain and how they're actually used, whether these weapons are destroying energy infrastructure, for example, and particularly nuclear energy infrastructure. And we have seen that in the Russia-Ukraine conflict, where this is very dangerous for not only the environment, but also people's healths. Yeah, and then I think as well, like for some of these weapons, and hopefully we can get into thinking about autonomous weapon systems a bit later on, but there are legal risks because certain weapons, while some may be banned under international law, looking at some of the controversial weapons, there's still evolving regulatory environment around some of the newer technologies. And so investors are certainly looking at how to better understand and account for that in their investment decision making.
Absolutely, thank you. And Jillian, from Mercer's perspective, what work have you been doing on the topic, and how has your approach evolved in recent years?
Fairly consistent with what Estelle has laid out for this region. I would say we are fairly similar to many practitioners. My team and I, we're working through climate and nature. The list keeps growing, and modern slavery, etc. So for us, it has been very much the high-profile conflicts and the client member queries on those conflicts that have brought this to our attention and reprioritized, if you like, the longer list and how this fits in that list. But if we think about our whole approach and how we have then come to a way forward, it's certainly very much a work in progress on this. So our general approach is, given the scale of our portfolio exposure, and our approach is very much to leverage our investment managers, our data providers, collaborative initiatives like RIAA, and engagement first is our approach. So exclusions require a very high stakeholder expectation threshold and very clear definitions. And as has already been raised, what used to be more black and white and clear through treaties and conventions is now becoming quite grey, which makes exclusions difficult. And our general approach is to try and join the dots between all of these topics rather than keep them in isolation. So as Estelle's rightly mentioned, when you come to defence or military, there are the human rights and legal aspects to this, but there are the environmental aspects, the sovereign governance connections. So what the approach that we're largely taking is a CARA's approach, so a conflict-affected and high-risk areas approach, so rather than try to target particular weapons or particular regions, really looking at our obligations as a private sector participant under international humanitarian law, and how can toolkits like the RIAA toolkit, GRID, UNDP guidance coming help us to do that. So it largely becomes a risk prioritisation exercise by geography, portfolio materiality, but then it's those company level indicators that are the difficult part. What are those indicators? Which company is doing what exactly becomes that trigger for escalation or concern that we then want to take additional steps on. And that's certainly very much a work in progress.
Okay, thank you. And I think we will be coming back to touch on some of those topics later in the panel. But coming to Yumi, could you talk about a bit what Robeco has been doing on the topic, and especially for our APAC audience, some of the emerging themes that you're seeing in the region?
Yeah, sure. Thank you for the question. So as Robeco, we have been building out our approach to defense and dual-use technology across our domains. And perhaps I'd like to share our approach mainly from the three perspectives, which are our exclusion framework and company engagement, and our more kind of traditional investment research. In terms of our exclusion framework, it draws a really firm line at controversial weapons, anti-personnel mines, cluster munitions, etc. And this applies to all of our strategies. On the other hand, for more sustainable strategies, we apply additional revenue thresholds on weapon systems and weapons-related services and products. We updated this framework in December of last year to allow greater granularity and differentiation across the defense value chain. So the dual-use landscape had become really too nuanced. I'm sure we're going to discuss what kind of technologies and products are out there in this webinar, but it has really become too much more granular, much more nuanced for a blunt instrument like exclusion policy. So that's by differentiating kind of a revenue threshold and what type of products in our exclusion policy as well. We try to kind of respond to that trend. And secondly, in terms of the engagement, we have been engaging with both defense primes and dual-use technology companies that are prominent in the military setting. We also co-authored investor recommendations on rights-based AI governance with a few other institutional investors in April of last year. And lastly, this is more in the investment research domain, but we have completed an analysis of quite a lot of defense companies across the globe, and of course, APAC companies are included in this analysis. And we found really quite a wide range of ESG performance. Some of the companies analyzed were from South Korea, Japan, India, China, etc. And the outcome of that is used in our investment approach. Perhaps in terms of the regional picture, I think the overarching trend is that perhaps two things. One is, of course, the defense spending is also rising in the APAC region as well. In 2025, we have seen the biggest annual rise since 2009. And of course, the technology driving that spending is very much present in the APAC portfolios. So chips, cloud, robotics, AI platforms, etc. But the spending, I think the reason for the rising spending is not quite the same as Europe or in the US, of course. It is, of course, due to the long-standing regional tensions, but also due to growing uncertainty over the US support in the regional security. And in terms of the companies in the region, we see different flavors in terms of the investment attractiveness of companies, and I will talk about more of the defense prime companies here. For example, the defense has been traditionally structurally low margin, especially in countries like China. But on the other hand, this is changing in countries like in Japan or Korea, where demand capacity dynamics and policy shifts are improving the economics and the margins of these defense businesses. Now, I think the question is whether it's going to last or not, but we do think that this is longer lasting trend. Maybe I will stop there.
Thank you. No, I think this question around data availability and how far investors can actually assess these companies has come up a couple of times already. So I want to talk about both data and investors' stewardship activities. Anna, for investors who are just starting out on this journey and beginning to look at their defense exposures and the risks that they might be finding in their portfolio, what are some of the resources and tools that are available to them?
Sure. That landscape has changed quite a lot there. If we look a few years back, what we had then, and now we have more resources available. And I would guide somebody who starts this journey to start with the UN Guiding Principles on Business and Human Rights. It's still very highly relevant, and particularly when companies operate in conflict-affected and high-risk areas. Then another tool that's already been mentioned is the RIAA's Investor Toolkit on Human Rights and Armed Conflict. I think it's a very practical resource, and it was one that we used at the Church Pension Fund also in Finland. And then we go on to GRID, which is the new evolving guidance for responsible investment in defense-related companies. So it is a work in progress. I think they are now in a consulting phase of a first version. And it is said, or the target is to be launched late October, early November this autumn. And in this document, they give advice and guidelines how to approach the screening, due diligence, controversies, stewardship, communication around defense-related holdings. And I think it's very useful in the perspective that now we get more broad principles on companies that mainly operate, say, in industrials or technology or telecommunication space, but they have dual use exposure to say the army, and we can get some tools. I understood there are not a particular KPI or threshold set there that, for instance, that if 20% of a company's revenue comes from a certain activity, that it should automatically be excluded, or that it's not a responsible defense name, but it's up to every investor how to implement these guidelines then. And I would say also that it has a lot of focus on product risk, human rights due diligence, the governance, exports and end use, transparency, and accountability, and will become kind of a framework to set the scene, I would say, going forward. So very much looking forward to the GRID being launched then later this fall.
Okay, thank you. And I think the Global Advisory Alliance has its own website with some of these resources linked as well, doesn't it?
Exactly. So we have compiled available resources to our website, and we can share the link in the chat, and please feel free to use these resources in the help of designing your own work.
Okay, thank you. And then on to Jillian. So I understand that Mercer has been engaging its data providers on conflict zone data. Could you talk about why you felt you needed to do this and what the results have been?
Sure. So the frameworks that Anna-Stina has outlined are very helpful. And to go through that foundational process, what is the investor case? What are the fiduciary duty risks, the legal risks, the reputation risks, and actually framing up why this is important and how to go about that and where to start and what are some of the legal foundations. I have a husband who does legal things, so that helps, but just understanding international humanitarian law and conflict affected high risk areas and human rights, all of that, and understanding what our private sector obligations are in that space. So all of those are very helpful. And then the new ones that are coming are going into a little bit more detail. So we work through that process, but as I mentioned, it's when you come to try and work out the list, which when you're looking at the scale of my portfolio as opposed to a single strategy 50 stock portfolio, I need some data to help me work through that prioritization process, and ideally some rules and guidance that I can use to then distinguish that company or that one. It's very difficult to agree on what the single list is of the most relevant of the 100-odd conflict zones happening in the world. But that is something we have been able to work through, and that is something I think that is possible to do. It's the second phase when you're looking at those company level indicators. And yes, a number of the data providers have some quite good indicators and the governance indicators, etc., that can be triangulated, but really coming to where exactly can you determine which defence companies are working within the rules of law, rules of war, and which ones, where you do have IHL breaches or UNGP breaches, etc. It's very difficult to do that. And we started engaging with our data providers individually. We weren't the only ones doing that. We started talking to some other peers, and RIAA helpfully facilitated a dialogue. And there were about 40 or 50 of us, I think, on that call across Australia and New Zealand. And it was really helpful for us to understand from multiple data providers what their challenges were, some of which were US legal related, and some of which were transparency related, and the practicalities of the speed of change and being able to verify, and the legal risks that come with trying to give verified lists on particular companies and activities. It was also helpful for them to challenge us as the investors to say, what exactly do you need? Because we have a long list of things, of course, that we want. What exactly is helpful? Where is there commonality for them to help respond to that? And already they have started to do that. There's more to come. So again, this is a work in progress, but that dialogue in itself has just sped up this process rather than us all individually having that conversation to say, when we come to apply these very excellent guidance tools, when we come to the practical implementation and the data that we might like to see, and as we said in that process, we don't necessarily need a single verified list. As we've all established, it's not as black and white as we would like it to be. But what are those indicators that can help us to see where the flags might be for us to do some further investigation, then for us to work out, is it an engagement approach or an exclusion approach or whatever the step is that we decide is appropriate for our portfolios and our exposures. So we're making progress, a bit more to go yet.
Thank you. And a similar question for Yumi. In a world of increasingly blurred lines, is Robeco managing to get the data that it needs?
Yes, great question. This is one of the hardest operational, challenges that we face and other investors face. One of which is coming from the fact that the many data providers move away from providing data on CARAs, as Jillian mentioned. I would say another issue is that the traditional revenue product-based screening often also comes from ESG data providers, is becoming quite obsolete. Traditional, defense prime companies would report defense revenues explicitly. However, companies providing the technology layer of the modern military AI, for example, cloud hyperscalers, semiconductor manufacturers, AI platform developers. Another recent example is this Korean gaming company, Krafton. They have announced to make a JV with Hanwha Aerospace to, optimize the testing and simulation of the war battlefield situations using the gaming experience. So that's quite really interesting example of blurred line. So, these type of companies, of course, typically don't provide the breakdown of their defense contract revenues, and especially by end use application. For example, a chip in a consumer device and a chip in an autonomous targeting system, they could look identical on the revenue line. So this blurred line between the defense and commercial tech is quite difficult to be captured with often kind of rigid methodology of traditional data provider. Their research, and I can attest to that, coming previously working from Sustainalytics, which is one of the bigger data providers before Robeco. So at Robeco, we managed this gap by basically doing primary research. And that includes, of course, engagement conversations, regulatory filing, research, contract disclosures, analyzing the investigative journalism, as well as utilizing some of the UN databases. I think I mentioned already our investment research across different products and services companies across the globe. We have also looked into the dual use technology specifically as well. And perhaps I will highlight that we also use the engagement as a really kind of information collection mechanism. For example, when we engage an American technology company on its conflict-affected high-risk area exposure, or an American defense manufacturer on AI contracting practices, part of what we are doing is really asking questions that data providers cannot answer, which is, for example, has the company conducted an AI-specific human rights impact assessment? What kind of end-use due diligence do you apply to government defense clients, etc.? And these answers, or the lack thereof, are really important information on its own right for us to take into account in our investment decision making. And lastly, we're also part of some of the industry initiatives that have been highlighted earlier, such as GRID, working group on military AI and AWS, business and conflict community. So, with the lack of ESG data provider input, it's really quite important for us to stay involved and collectively build capacity as investors on this topic in the absence of the good data.
Okay,
I might just quickly highlight, Dominique, when RIAA brought together the asset owners and managers with the data providers for the dialogue that Jillian was talking about before, it did become really clear, and I think Yumi's alluded to this, that it's not just public equities, right, where there's a data gap. We've got, in particular in this sector, fixed income, corporate bonds, sovereign debt, private markets, and so on. So that is, I think, a bit of a challenge for the industry at the moment to get that information, and particularly coming out of conflict zones. And as I mentioned, this is not just the traditional supply chains and suppliers, it's about the customer as well. So that makes it even trickier.
Okay, brilliant, thank you. And maybe moving from the data provider onto the actual company engagement side, Christine, you've had a lot of experience in active ownership and stewardship. How responsive did you find defence companies when you were talking to them about these issues? And are there particular difficult spots or good ways to have conversations about these topics?
Well, like all good answers, I would say it depends. It depends on the context in which you approach them. So earlier I shared an example of High Vision. Back then there were some controversies already. So the company was kind of felt obliged to answer the questions, and you can be more direct in a way because the controversy has already taken place. But now we are facing a very different environment, as Yumi and Estelle was alluded to. So I'll give two examples, right? The first one I mentioned at the beginning, it was Deutz, a German company acquiring a private FFG company, which is a defense company. So Deutz itself, it's an industrial company. But if you look at the acquisition, the EGM on 24th, which was just 2 days ago, it has 99.7% shareholder approval of the deal. So investors have been very supportive of this expansion of mandate into the defensive sector. And the way the company put it is that it's to support an industrial company making a strategic move into defense where the economic and societal case is credible. And if you look at the investor questions, a lot of it would be around what is the margin. So you can see that this is disclosed information. FFG has about 760 million revenue euro in 2025, and an order book of almost 2 billion euro. It's grown 50% annually since 2023. Investors are happy, and the margin is about 20%. And all these numbers give comfort, especially the way the narrative the company has given has been around security in Europe. It's about jobs. It's about peace and also expansion of the business mandate. So this has gone really well to become a resilient industrial company. We love this word now, resilient. It's just the right word. If it's read by AI, it works. And then we can move on to maybe Asia again. Of course, we're talking to a group of Asian investors and colleagues here. Rakuten, which is fundamentally a e-commerce company in Japan, it is now partnering with a German defense AI company, Helsing, to introduce military drone technology into Japan. So this goes back to the question what Yumi was saying, that how is this, we can't justify this in a revenue line anymore, because there is a lot of partnership happening. There's a lot of new initiatives going on. And if you approach companies, they'll be very happy to talk about it. And I think this is exactly the right time for investor stewardship teams to embed that thinking framework of, why would you enter into this partnership? What is expected of it? How is it going to change your business focus, in the next 3 to 5 years if this works? How much control? Now, going back to the autonomous weapon issue, how much control is retained by human, and how is it being implemented? Because when you're thinking about it in an autonomous weapon situation, if you have 20 seconds to make a decision in a challenging environment, how much human control and who has the experience to provide that control becomes very important. So how much a company entering into this conversation is able to influence that kind of governance framework becomes most important. But a lot of the times you can't. So if you talk to Hyundai heavy duties, so for example, for years they've been selling bulldozers in the Middle Eastern region. And this is an ongoing conversation with the company. And they've been disclosing that, well, they have gotten rid of their middleman dealers. So they're not selling them to, how should I frame it, a non-preferred or conflict-induced use, but it is still, appearing. But they have no control after the products have been sold to a dealer, if they still exist. So I think we have identified an interesting juncture, especially when companies are acquiring, creating partnership, and many of them would be traditional companies. And that is where the investor stewardship power can be amplified if we have a strong framework that underpins it.
Thank you. And just to complete this engagement chain, Estelle, this is an issue that retail investors and pension savers care hugely about. I think certainly in the conversations around university endowment divestment or the local authority pension scheme in the UK, there has been a lot of campaigner pressure from the opposite side of risk and ethical issue as opposed to opportunity. Could you talk a bit about how your member supers are engaging their members and ensuring they're informed and aligned on this issue?
Yeah, great. No, I think Christine's examples there highlights how difficult this issue is to engage with retail investors and members on, because obviously people have different ethical choices. Certainly people's intention to invest in line with their values is increasing globally, certainly here in Australia and in New Zealand. And, for some people, it's never okay to invest in weapons. And certainly some of the faith-based funds have a blanket exclusion. Let's not forget, they kill people. That's their whole point. And also the intention for a lot of these products is that they will be destroyed themselves. So they're kind of an unproductive, if you're thinking kind of in an economic sense. So, and others might just want to avoid those weapons that do indiscriminate harm. But think it's okay to invest in companies that protect countries like Ukraine. So the important thing is that consumers have all the information that they need to make their own decisions based on their own values. And RIAA's research has found that recent world events, like those conflicts that are ongoing and immediately past, have been 48% of people say that these recent conflicts have prompted them to think about how they're invested and whether or not their investments are impacting human rights. Also, we find that 55% of Australians actually want to avoid investments in armaments, and 80% as well in New Zealand. Interestingly, along gender lines, women care more about this issue and avoiding investment in weapons than men do. So yes, we have also here in Australia seen campaigns against some of the super funds, the pension funds. And we're also kind of in a strange greenwashing environment as well, where the regulator's really cracking down on claims that are made that aren't in line with what's behind the product and the investment methodology, and in particular the portfolio holdings. So investors are looking really closely at their descriptions of what their exclusions are. And certainly it's very common in Australia and New Zealand to state that you avoid investing in controversial weapons and also nuclear weapons. So explaining that scope of the weapons policy, being really clear about what the definition of controversial weapons is, because there isn't really an agreed definition of that either. So if you're excluding certain things, you need to be really clear about what they are. And whether or not your definition's anchored in, the UN conventions or treaties, keeping in mind that there isn't one yet around some of these newer weapons. So definitely, the conflict in Gaza, the war in Ukraine, there's also situations in Myanmar, in Sudan, and so on. Definitely people are looking at this more and asking more from their funds. So the exposure needs to be really clearly stated. And also when using terms like vague terms like exposure, for example, what do you mean by exposure? Do you mean, the production of weapons, the development, the assembly? What do you do about the dual use tech that people have been talking about in this webinar? Delivery platforms, is it only the intended use? And even getting to things like storage, because a lot of conventional weapons companies actually store some of the more controversial weapons that might be included in your exclusion policy. So it is quite nuanced and challenging, and the communications with the end consumer need to be very much in line with the legal documentation and the investment strategy, and then absolutely the portfolio holdings, including underlying holdings.
Okay, brilliant. So we will move on to audience questions in just 1 second. Obviously, drones and autonomous systems have come up quite a lot over the conversation, so I just wanted to get Jillian and Yumi's thoughts on A, how they're looking at it, and B, how investors should begin to think about this new and emerging technology and its integration into military use. Jillian.
I guess reiterating the point around the data providers and the definitions, and then it is going to be about the how they're being used. And just picking up from Estelle's point there, so at the moment, yes, we very much rely, particularly from an exclusions perspective, on the treaties and conventions as some level of guidance on agreed social norms and some indication of where our stakeholders, such as our superannuation members, would have agreement about which weapons would have some level of controversy. So you would like to think, if the principles of international law are going to hold up, and I think we all hope that they do, that the legal mechanisms will catch up with what is happening from a tech perspective. But it's also, we can go into all the nuances of the particular weapons and the details about exactly whether that is a good or a bad way to kill people and how many people and all of that level of detail. But I do think if we come back up from a government perspective, and it's not necessarily even just some new UN treaty that needs to be agreed, looking at the existing treaties, so there is already the Arms Trade Treaty, and if you look at the grid and the frameworks around that, better transparency around which sovereign entities are buying what and what are we exporting. So if you look at the control that we have in Australia with our own government, and the rules and the guidance and the legal standards that we're upholding here, that's probably a really good starting point. And the more that we have that transparency and an understanding that, at least here in Australia, we are consistent with our ratification approach to the Arms Trade Treaty, that legal approach, if we've got that level of transparency, that's going to help us as well.
Okay, thank you, Yumi.
Yeah, I will keep it short, but at a high level, our perspectives are from governance and human rights due diligence and transparency perspectives. These are what we expect from companies, but I will focus on human rights due diligence part because this is really important and what the companies are not doing currently in terms of the product end use. So how the product end use is monitored and ideally the company is conducting human rights due diligence on the product use. Companies are experienced from various engagement cases is that companies often don't have this product end use due diligence at all. And if it's a prime defense companies, they rely on, they kind of delegate the responsibilities to the export control regimes. Of course, this is important, as Jillian said. However, we asked for an assessment, human rights assessment on top of that. And perhaps on autonomous weapons specifically, we expect companies developing AI-enabled systems to have a documented policy on human rights control and accountability requirements at every stage of the product lifecycle. I think this is also important, that there is a control and accountability mechanism by humans from the design stage to the development stage. And these are quite important because at the deployment stage, of course, you can say that there's a control. However, like Christine said earlier, it's a millisecond. And 90-something% probability, it's a military target. What is the training data of that at the design and development stage? Right, I think it comes back to how the human in the loop is embedded at that earlier stage of the product life cycle is quite important for us to understand also there.
Okay, brilliant, thank you. And true to form, we have run well over the time that we'd allotted to panel discussion, but we'll try and get to some of these audience questions. So there's a couple of questions which I think are making a point about what is the role of investors looking at this topic versus that of governments, and should we be looking at the government or the company, and is it the government's job to solve these issues or investors? That's maybe a thorny one to answer in 6 minutes, but if anyone's got any thoughts on that.
I think the technology is moving so quickly that the regulation is not catching up, if at all. So it is to some extent investors' job to really push for companies to a higher standard.
Yeah, I think as well it is investors' job to pressure governments to put appropriate regulation in place, and also that regulation kind of globally can be as consistent as possible. The UN takes a long time for the wheels to churn to come up with kind of global agreements, treaties, and then countries don't sign on. And that's a challenge. But I think domestically, certainly in Australasia, investors are far more engaged at a policy level and looking at kind of issues like this from a systemic perspective. So I think both have their part to play. And I do think improved company reporting and transparency at a global level as well should be something we should be aiming for.
The Red Lines package that I've only just become familiar with, that's becoming live on the 15th of September for Australia, there's 4 new bills being proposed to go through Parliament. Long stepped away as to whether they will or not, but it outlines some of the asks, if you like, from a legal perspective and what government, or our local government at least, could be doing. Something to review.
Thank you. So we have another question here which asks, investors will have a threshold very often of, say, 10% for excluding a company for defence exposure. Is that still fit for purpose depending on the actual use of what they're producing? So the example given here is SpaceX has roughly 7% exposure to defence, but their Starlink equipment is an incredibly pivotal and important piece of technology for militaries, and we've seen the impact of that in the Russia-Ukraine war. And they say, surely in these situations, that 7% is far more significant as a defence exposure. So are these revenue thresholds still fit for purpose when thinking about the actual product and its impact on a conflict?
I think it still does, because it gives us some continuity of the assessment over time, which is important to investors as always. But it cannot be the only thing that, or the only item or factor that is being judged. I think it goes back to some of the conversations we had. It is about the context in which the business is changing. What is the intentionality of that evolution? What is the quality of the partnership? How much control and understanding is in terms of the intended use of the technology and the process involving around it? But I think most difficult really is, how does that human in the loop actually make a difference? We talked about the probability data. We talked about those milliseconds for a decision maker to respond to whether to take the AI recommendation or not. I think increasingly all of us who've been using LLM or using AI would know that we are lazy. Humans are lazy. Over time, if we believe that an analytical engine can provide us with high quality analysis, we will by default kind of become more reliant on it. And imagine that this is happening in defense. So who would have the training and the confidence and character? It's almost like going back to what board directors are like. It's not just about the skill. It's about the quality of judgment and confidence and courage to be able to say, hang on, that doesn't make sense. I need to look deeper into it. So I don't know how to build that into an assessment. I'm sure we can, but we just need to be aware of the fact that this is needed. So the revenue line, going back to that question, revenue line, yes, is helpful for continuity, for our understanding, but it cannot be the only thing that we analyze a company on, or the whole situation.
And one point to add to that is going back to the UN guiding principles and some of the guidance that's either out there or coming out, but that distinction between causing and contributing and directly linked to, so thinking about severity and thinking about the role that a company in its entirety or its particular product is playing in a conflict or in a situation, or what the end result might be, and some level of distinction in there. But again, it's not as neat, is it, as a quantified revenue number.
Great, thank you. On which note, I think we are very unfortunately out of time. So it only remains for me to thank my panelists, and I will hand back to Anna to close us out.
Thank you very much, Dominic, for guiding today's discussion. And a big thank you to all our speakers for sharing your perspectives, and also to our participants for engaging with very good and topical questions in this complex and fast evolving area. We will follow up this discussion or this webinar with the roundtable discussion. So for those participants who would like to continue the conversation, we will send invitations, and the roundtable will be hosted under a Chatham House rule. So look out for email from team at globaladvisoryalliance.com. And if you are otherwise interested in following our work, connecting with us, you can find us on LinkedIn, or you can also reach out directly to team at globaladvisoryalliance.com. And finally, I would like to thank RIAA for co-hosting this session, Japan SIF and Responsible Investor also for partnering with us. Thank you all, and have a good rest of the day.